there has been a tad bit of tapering off as far as the Indian market is concerned. We are below the level of 16,700 on the Nifty, and Nifty Bank, which was gaining over 1,400 points at one point of time, has now slowed down a tad bit with an uptick of around 1,267. Not too much to worry given the huge, strong opening that we have seen, but just a tad bit of tapering down is something that we are witnessing. It's a good time then to welcome on board Mr. Anil Gupta, Chairman and MD at KEI Industries, to understand what will be the impact of the commodity prices which are going up, as well as how does the overall business outlook looks like. Mr. Gupta, good afternoon. Thank you so much for making time for ET Now. First up, if you can begin by telling us how are you dealing with the sharp increase in commodity prices? Have you been able to, pass it on to the consumers? Because that is something that we have been watching out for.
Of course, the copper and aluminium prices has been rising not from now, but almost for last 1 year. And we have seen that it has been progressively rising. Of course, aluminium has little bit jumped sharply and fluctuated in last 3-4 days, but I think it is now stabilizing. In our business model, we are keeping lot of finished goods and raw material in our inventory for our dealer business, in our depots. And so far as B2B business is concerned, we are always hedging the raw material like copper and aluminium with respect to our order booking. You must have seen in last 4 quarters that in spite of heavy increases in the input cost, we have been able to manage our EBITDA to the desired level. So this kind of price hikes, definitely we do pass on these price hikes to the customers as gradually over a period of 15 to 30 days so far as retail market is concerned. And so far as B2B market is concerned, whenever we are making an offer, we are taking into consideration only the prevailing prices on that day. And, freezing those inputs on the date when the order is being finalized. So keep a complete control over the raw material vis-a-vis our order.
Right, Mr. Gupta, you did touch upon the margins. I don't want to talk about last quarter specifically in terms of margins. Now, last quarter, your margins actually dipped by 11%. Should we expect a further pressure coming in over there, or do you think, this 11% is what you will be maintaining at right now?
I do agree that in last quarter, the margins were contracted by around 1%, but this was a lot due to many other factors like the cost of shipping, the transportation, and a few other costs which cannot be hedged. Maybe marginally we may see this impact for another quarter, but I don't see much risk over it because we are completely covered so far as major inputs are concerned.
Mr. Gupta, that point is taken, but we have been seeing that exports for some of the companies have gotten impacted on account of the geopolitical tensions that we are seeing between Russia and Ukraine. What is your sense regarding that? And is crude prices something which has impacted the logistics costs as well?
Little bit of exports got impacted last year, but I think that our exports are majorly going to oil and gas refineries overseas and also to solar and wind projects in a few countries. And with the very high oil prices, I think it will boost the investment and bring more demand to the products in 1 to 2 years time. So I don't think that there will be a much impact. Maybe temporarily in short run there may be a marginal impact, but I don't see many major challenge in that.
Right, Mr. Gupta, but I do want to talk about your foray into the FMEG space now. What's your strategy here? What's your plan here? What can we expect now?
At the moment, we have not freezed any plan for entering into any FMEG product, but we first want to focus in growing our wires and cables market substantially from here on to at least by 70 to 80% or 100% level in next 3 years. And during this period, in a 1 year's time, we will definitely come out with a strategy if we want to launch any new products from our dealer network. So, and we'll update you on that.
Okay, Mr. Gupta, you did hint at the fact that in the near term there might be some demand which might get delayed. Does that mean that we should brace ourselves for a weaker Q4?
No, Q4 will not be weaker. Reason is that it is already now we are talking at on 10th March and or 9th March. So this month's order and inputs are already there in the factories. So, and we are well booked for next few months.
Okay, Mr. Gupta, thank you so much for joining in with us on the show today. It's always a pleasure having you and, getting your insights specifically. But with that, we are actually going to slip into a short break, but stay tuned in because we'll be back with more on the other side.